using like crypto.com, Coinbase, I think Kraken, like all the platforms that you're using are going to send you, I mean, probably have already sent you some tax documents. Make sure you read those emails and see what they're saying. Now, so we use those platforms to make your transaction in and out of your investment and have incurred losses of wins. You can file your losses as a tax benefit so that you don't have to pay, and it can offset some of your gains. What you need to do is make sure your accountant can help you deciding or defining how to file for those losses and your gains as well. Now, many tax preparer may not be aware of that tax. You need to be aware of that too. So do some research, go online, ask the professionals about that new tax, and make sure that whatever losses you've incurred. I know a lot of people invested in PetronPay, Shimall, and various platforms, and people are still investing in platforms that are not paying them. Make sure that you reach out to the professionals, and that could be a tax advantage. That loss, you don't lose 100%. This is one thing. Now, if your accountant is not aware of that, try to look around, interview some of them, ask to a couple of accountants, make sure that you reach out to the professionals, and that could be a tax advantage. Or you trust someone with your investment or with filing your taxes. Know that you are the ultimate responsible. And IRS is not going to, if there's any error, IRS will come back to you and not to the tax preparer, because it's your name, it's your social security number that's on those files. Make sure you know what it is. Okay, just to recap, if you invested, whatever investment you made this year, you have to pay taxes on it, whether on crypto or on any capital gain that you've incurred this year, that you've made this year. Make sure you know the tax code, make sure you know how to file them, and make sure you understand what it entails. If you do it well, some of your losses could be offset, and you won't have to pay as much as you may have owed, or you may owe the IRS. So if you have a regular W-2, it's also a great way to reduce your taxes, your taxable income, because when you're an investor, you are only taxed on the profit. You are not taxed on the capital. No. So make sure you know how to file them. Make sure you have the correct forms. This year, you have this 1090K tax rule that is out, meaning that if you use cash transfers, application like Venmo, PayPal, or Cash App, starting at $600 and more, you are subject to tax. You will have to pay taxes on it. They will send you Form 1090K, I think. Now the threshold is $600. There's still discussion in the Congress and in the Senate to bring that up to $10,000, but the discussions, I'm not aware if the discussions have concluded or not. But for now, you will have to pay taxes on those as well, on the money you've received, if this money was a gain or it was for an investment. But if it was a gift and you can justify that the money was received as a gift, no, you don't have to pay taxes on it. Okay, so from this is going to be applicable this year, but for next year, make sure that whatever you do this year, you understand. A great way to look at taxes is always to be at least a year. I know a lot of people that recommend at least 3 years in advance. You have to plan your taxes on the long term. Make sure you know how to plan your taxes. Make sure that you know what you're doing. Make sure that everything you do or everything you invest in, you understand the tax advantage or the tax benefit. Generally, the tax implication of all your transaction, of all your gains. It is a federal crime not to file taxes or not to report an income. Some income are tax-free, so make sure if you're not reporting them, that someone else is not reporting that they pay you for something. I'm talking here especially for people that like to deal with cash, because there's no trace. It's good, but at some point you want to make sure that whoever is paying you cash is not reporting to the IRS that they pay you, because if they do, the IRS is going to come after you. Okay, so make sure you know what you're doing. Check your losses. Make sure you file your taxes right this year. Reach out to your accountant. Interview a few accountants that may know the tax code that you fall into. And whatever you do, be careful. Be careful. Know that you are still responsible for your taxes, and that whoever prepares your taxes is not going to be accountable for the filing. But they have the expertise and the license to do your taxes. Make sure then that you're talking to a certified accountant. Okay, as you know, I am not a financial advisor. I am not an accountant. I am not a CPA. All information I'm sharing here is only for informational purposes. Know that investment is risky, and you have to invest any amount you can afford to lose. Thank you.